Hello and welcome dear traders and investors. I'm glad to present you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. On the daily time frame, Bitcoin continues to trade within a well-established bearish trend. The market structure remains decisively bearish. The CHOCH level has been moved up to 82,800 USD, following the formation of a new lower low. Only a sustained move above 82,800 USD would invalidate the current bearish structure and signal that the downtrend has come to an end. At this stage, however, there are still no credible technical signs of a bullish reversal. As long as Bitcoin continues to print lower highs and lower lows, the broader outlook remains firmly bearish, and we expect the decline to continue. A bearish fair value gap remains in place on the daily chart between 68,000 70,700 USD. This area continues to serve as a primary point of interest for sellers, where new short entry opportunities may emerge if the price retraces into the imbalance. For now, however, the FEG has not yet been tested. Until Bitcoin revisits the zone and provides confirmation through bearish price action, traders should remain patient and wait for high probability setups rather than anticipating an early reversal. On the 4-hour time frame, Bitcoin remains in a clear bearish trend. The CHOCH level that had been supporting the corrective recovery has now been broken, confirming that sellers have regained control of the market. The new CHOCH level, defining the current bearish structure, is located at 65,600 USD. As long as the price remains below that level, the downside trend remains intact. Bitcoin did react to the third bearish FEG, but the response was relatively weak. At the same time, price swept the liquidity, retesting below the June 25-26 lows, completing the liquidity grab we had anticipated. As expected, that sweep triggered a corrective rebound. However, we do not expect the current recovery to be particularly strong or long-lasting. The broader market structure continues to favor the bears, and the rally appears to be nothing more than a counter-trend move. At the moment, no new ICT patterns have formed on the 4-hour chart, leaving traders without fresh high probability setups. Unlike Ethereum, Bitcoin is also showing no clear signs of entering a consolidation phase. Until new bullish signals emerge or the higher timeframe structure changes, the current rebound should be viewed as a temporary correction within an ongoing downtrend. Since June 25, Ethereum has begun a strong rally above 1500, reaching 1841 during Monday's US trading session. This represents a sharp increase of more than 20%. As a result, technical correction is expected in the coming days, as the price has technically reached overbought levels. On the 4-hour chart, we can see that Ethereum has consolidated above the Muri 2.8 level and above the 200 EMA. It's a purple line on a chart, and the 21-day moving average, it's a cyan line on a graphic, reinforcing its positive outlook. If Ethereum price consolidates above 1750 in the coming days, it is likely to continue rising until it reaches the Muri 3.8 line around 1875. Beyond 1875, Ethereum could reach the psychological level of 2000 USD. However, it may struggle to reach this target, as it's technically in overbought territory. If, in the coming hours, Ethereum price falls below the 200 EMA and the Muri 2.8 level, the outlook could turn negative, and a short technical correction toward the Muri 1.8 level around 1625, which also coincides with the lower bound of the bullish channel, could be expected. The Eagle indicator has reached overbought levels. The outlook for Ethereum remains positive, so it's likely to continue rising. A possible entry point for short positions could be if it reaches 1875 once again, or if the Ethereum price falls below 1750. That's all for today. See you online soon, and good luck.